Hi there, my name is Greg Laxton and I'll be highlighting a few key aspects of Discovery's 2019 interim results. Discovery has a weight of 1% in the CAPS-Swix index and we have a neutral recommendation. We arrived at this by looking at the following. The group is currently trading at a price to embedded value of around 1.37, with the embedded value being 10,539.8 cents per share. This premium implies that growth is expected in the embedded value going forward. However, there are concerns over the long duration assumption in the embedded value calculation and the potential impact of a higher than estimated lapses. There is significant growth opportunity for the new initiatives, which could help diversify the group's earnings and therefore place less reliance on SA Health and Life. The majority of recent declines in earnings were due to random variability in mortality, which was partially offset by positive surprises in other parts of the business. The group has taken steps to dampen the impact of future negative mortality variances. However, this does come at the cost of the fact that the group will see fewer benefits from positive variances. Some of the key potential drivers of future growth are likely to be the launch of the Discovery Bank and the continued superior growth seen in Ping An and in the Vitality Group. These new ventures are difficult to value, and while some momentum has been seen, a successful market uptake is not a given. This table shows details of our sum of the parts valuation of the group. The other section includes the current Discovery Card business, which we value at approximately 7 billion rand. This is based on the 1.8 billion that Discovery required to purchase the remaining 25% stake in the business. Our calculation ultimately returned a value of 146.79 rand per share. The share price closed at 144 rand and 92 cents on Monday, 18 March. We feel the group is fairly valued and that forecast risk in valuing the new initiatives, namely Ping An and the bank, remains high. We did do a rough calculation on the potential value of the bank, and we calculated that it would be worth between 3 billion and 6.5 billion, which equates to between 497 and 955 cents per share. The net debt to market cap of the group has been trending up. This is due to spend on new business increasing from the target rates of 10% to 21% of earnings. It is worth noting, though, that this increase in spend was in line with expectations for the latest report date. Management has said that spend on new business will decline towards the target rate in the coming years. The financial leverage ratio has, despite the increased debt levels, improved 80 basis points to 25%. The 1.8 billion rand the group required to purchase the 25% stake of the card business from First Rand was raised via an equity issuance. This was oversubscribed and 11.4 million shares were issued at 16,200 cents per share. Normalized headline earnings was down 16% to 2.376 billion and to 366.4 cents per share. This decline is due to increased spend in new initiatives, as well as by fair value gains and losses on the shareholder investment portfolio, now being required to be reported on the income statement. Normalized profit from operations was down 4% due to the spike in mortality claims, which amounted to 8% of earnings. New business annual premium grew 16% to 9.05 billion. Gross inflows under management increased by 11% to 67.54 billion. The embedded value was up 13% to 68.03 billion and up 11% to 103.6 rand on a per share basis, while the value of in-force business increased by 7% to 61.67 billion. The group has stated that it will launch the bank slowly and will prioritize members with a strong credit history and those who are actively engaged with Vitality. This reduces the risk of credit loss, will help manage the administration curve, and help fund the bank by allowing access to significant deposits. There is significant opportunity for integration across the UK life business, which could further drive growth as Vitality becomes more widespread. Vitality Health has seen strong growth due to declining loss ratios and lapse rates and increase in new business volumes. If this trend continues, then further growth can be expected. The 4-year compound annual earnings growth rate expectation for the different businesses are as follows: 22% for new businesses, 12% for the established, and 14% for emerging. Just a reminder, and to end off, Discovery has a weight of 1% in the CAPSWIX, and we have a neutral recommendation. Before I end off, if you would like to trade, then please contact our trading desk. Investors are reminded that they can refer to our online trading platform, which contains a more in-depth analysis on Discovery's 2019 interim results. For more information on how to interpret the trade idea, visit the events section on psg.co.za to access previous trade ideas and how to understand the method of analysis we use. Lastly, I would like to bring your attention to the following disclaimer. Thank you very much.